Today we learned that Supermicro's outside auditor, Ernst & Young, decided it could no longer audit the company. They sent a letter saying, quote, "We are resigning due to information that has recently come to our attention, which has led us to no longer be able to rely on management's and the audit committee's representations and to be unwilling to be associated with the financial statements prepared by management." Wow. Then they go on to explain, quote, "We can no longer provide the audit services in accordance with applicable law or professional obligations." Wow, that is about the most damning statement you will ever see from an accounting firm. Things are not super for Supermicro. The stock dropped like a rock, plunging from 49 to 33 today.
Hello, everyone. Today, we're diving into a fascinating but turbulent story around Supermicro Computer Inc. If you're curious whether this stock might be a buy, hold, or sell, stick with us as we unpack the details of their latest quarter. Supermicro, a company at the forefront of high-performance computing and AI-driven solutions, has been making big moves in the tech industry. However, recent events have left the market in a tailspin, with the stock price losing a staggering third of its value in just one day. The big question on everyone's mind: what happened, and where does Supermicro go from here? So here's the backdrop. Supermicro's auditor, Ernst & Young, recently resigned, citing concerns over the company's governance and transparency. This sudden departure hit the market hard, raising red flags about Supermicro's financial clarity and sparking fears of potential regulatory investigations. Understandably, this has created a window of opportunity for competitors like Dell Technologies, who may be positioned to gain from Supermicro's uncertain footing. Now, let's jump into the fundamentals. For the 3 months ending March 31st, 2024, Supermicro reported a massive 200% growth in net sales, reaching $3.85 billion. This was primarily driven by a surge in demand for their GPU servers and other high-performance computing products. However, despite this impressive revenue growth, the company's gross margin slipped from 17.6% to 15.5%. Why? Increased competition and shifts in product mix have pressured profitability. Additionally, operating expenses spiked by 72.1% as Supermicro ramped up investments in R&D and expanded its sales and marketing efforts. To fuel this growth, the company raised $1.73 billion from a public offering and issued $1.7 billion in convertible notes. From a strategic perspective, Supermicro is making bold moves, investing heavily in next-gen tech and expanding its production capabilities, including a major real estate acquisition in San Jose. While these investments have long-term growth potential, the short-term picture is complicated by mounting expenses and, of course, that unsettling auditor resignation. With the fundamentals covered, let's shift gears to the technicals. After the auditor's exit, the stock's price has been on a roller coaster, recently sliding into bearish territory. The stock's RSI has dropped below 50, hinting at waning momentum, and the MACD indicator is showing a similar negative trend. As for support and resistance levels, we're seeing key support around $32 and resistance near $50. Given the current volatility, these numbers could become pivotal in the near term. So, what does this all mean for potential investors? Let's look at valuation. With a trailing PE of 16.45 and a forward PE of 7.65, the stock appears to be undervalued, at least on paper. But with all the uncertainty around financial governance, this valuation comes with a big asterisk. In the short term, our outlook is negative. Given the governance issues, market sentiment, and volatility, a sell recommendation seems prudent. However, for those with a long-term view, there's reason to keep a hold position, considering Supermicro's investments in high-performance tech and manufacturing capacity, which could pay off down the road. If you're interested in more in-depth analysis like this, consider subscribing to our newsletter. The link is in the description below. Thank you for watching, and if you found this breakdown helpful, don't forget to like, subscribe, and share your thoughts in the comments. For more detailed information, check out the links in the description. Disclaimer: this video is for informational purposes only and does not constitute financial or investment advice. Always do your own research and consult a financial advisor before making investment decisions. Investing involves risks, including potential loss of principal.